If you work from home, you may be eligible to claim the home office deduction, which can significantly reduce your taxes. It's available if you have part or full-time self-employment income, whether you rent or own your home. This podcast will explain how the home office deduction works, who qualifies, and 5 rules for claiming it, no matter what type of venture you run from home. And if you want to learn more about this topic, be sure to check out Chapter 14 of my book, Money Smart Solopreneur, a personal finance system for freelancers, entrepreneurs, and side hustlers, which covers loads of tips for saving money when you have a home office. Welcome back, everyone. I appreciate you joining me for Money Girl episode 900. I'm Laura Adams, an award-winning author, on-camera spokesperson, money speaker, founder of The Money Stack, that's my Substack newsletter, and host of Money Girl with over 43 million downloads. If you've been enjoying the free content we love creating for you, please take a moment to rate and review the show in your podcast app. And if you're new here, welcome. If you have a question about money, you can leave it on our voicemail at 302-364-0308. You can also visit lauradadams.com to email me and learn more about my books, courses, and of course, the free Money Stack newsletter. All right, let's get into 5 rules for claiming the home office tax deduction. The first really important rule is that you must have business income. So if you work for yourself in any trade or business, either part-time or full-time, and your primary office is in your home, you likely have a home business for tax purposes. It doesn't matter if you're an online retailer, a freelance writer, a consultant, an Uber driver, or a dog walker. You can have a home-based business even if you mostly earn income outside the home. That's really common for many tradespeople and solopreneurs like musicians, sales reps, and gig workers. If you're self-employed and let's say you do administrative work, maybe it's scheduling, invoicing, communication, and record keeping, you do all of that at home where you rent or own your home, you can claim the home office tax deduction. However, if your only source of income is working from home as a W-2 employee, you cannot claim a home office deduction. Before 2018, employees used to be allowed to claim it, but that perk is no longer available. Now you must have self-employment income to qualify for the home office deduction. If you're a work-from-home employee, you might request expense reimbursement for your office setup costs from your employer. However, they're not obligated to pay you for it. Okay, the second rule you should know is that you must have a dedicated office space. So this basically means that you've got to have a dedicated space that you're using regularly and exclusively for conducting your business. For example, let's say you use an extra bedroom, or it could be a detached garage, or even a nook in your studio apartment to run your business. You can claim a deduction based on the size of that space relative to your home. And I'll explain more about that and how to calculate the home office deduction in a moment. While you don't need any walls to separate your office, it should be a distinct area in your home so you can determine its size. Now, the only exception is when you use part of your home for business storage, or maybe you use it as a childcare business. In those situations, you can consider the entire space and office for tax purposes. A tax-deductible home office must be the primary place where you run your business. But it doesn't have to be your only workplace. For example, if you do administrative work at home and meet clients in other places, you can still consider the area of your home used exclusively for business as your home office. Plus, you might do work at a co-working space or even a coffee shop if you're like me from time to time, and still have a legitimate home office. Again, you don't have to meet customers at home or have any special equipment there to qualify for the home office deduction. Okay, the third rule that you should know is that you can deduct direct office expenses. So when you have a home office, one type of deduction you can claim is for your direct expenses. So those are the costs you incur to set up and maintain your office space. For instance, if you work in a spare bedroom like I do, you might install new carpet. You could paint the walls, maybe purchase a new desk. You could have necessary repairs for that office or maintenance, like, I don't know, replacing a broken window or even a door lock for your office. Your direct office expenses are always 100% deductible, no matter the size of the space that you're using. So you want to be sure to keep track of any upgrades or furnishings for your home office so you can use them to help reduce your taxes. The fourth rule is that you can deduct indirect office expenses. So, in addition to direct expenses, one of the best aspects of having a home office is deducting all your office's indirect expenses. So, these costs are related to your office, but they actually affect your entire home or your entire apartment. For instance, let's say you're a renter. In that case, the cost of your rent, any renter's insurance, and your utilities would be examples of indirect expenses for your home office. You'd have to pay those expenses even if you didn't have a home office. And if you're a homeowner, potential indirect expenses typically include your mortgage interest, property taxes, homeowner's insurance, utilities, and maintenance. While you can't deduct the principal portion of your mortgage payment, that's the amount you borrowed to buy the home, you can recover a part of your home's cost annually through depreciation deductions using an IRS formula. In other words, allowable indirect expenses actually turn some of your household costs into home office deductions, which is terrific. However, they're deductible based on the size of your office as a percentage of your home, unless you use a simplified calculation, which I'm going to cover next. However, expenses that are unrelated to your office, like maybe you add a pool or remodel your kitchen, those are never tax deductible. So your ability to deduct costs when you run a business from home depend on whether it benefits your office directly, so that would be like furnishing it or putting carpet in it, or whether it benefits your entire home, like your power bill, your water bill, and your homeowner's insurance. That would be indirect expenses. In addition, you'll likely have many business expenses unrelated to your home office or your home, like marketing, office supplies, equipment, and professional services. Expenses you incur to run and grow your business are fully deductible no matter where you work. All right, the fifth rule you should know is that you must choose a calculation method. If you qualify for a home office deduction, you can calculate it in one of two ways, the standard method or the simplified method. The standard method requires you to keep good records and determine the percentage of your home used for business. You calculate and divide the square footage of your office by the square footage of your entire home. For example, if your home office is 12 feet by 10 feet, that's 120 square feet. If your entire home is 1,200 square feet, dividing 120 by 1,200 gives you a home office space that's 10% of your home. That means 10% of the qualifying indirect expenses of your home can be attributed to your business, and the remaining 90% would be for personal use. So let's say your monthly power bill is $100 and 10% of your home qualifies for business use. In that case, you can consider $10 of the bill a tax-deductible home office expense. To claim the standard method deduction, you're going to use Form 8829 called Expenses for Business Use of Your Home. You use that to calculate your deductible expenses, and then you file that form with Schedule C, which is called Profit or Loss from Business. Now, the simplified method allows you to claim $5 per square foot of your home office area up to a maximum of 300 square feet. So that caps your deduction at $1,500. That's 300 square feet by $5. So the simplified method is definitely straightforward. It's pretty easy because you don't have to do any record keeping. You simply measure the space and include it in Schedule C. It works best for small home offices, while the standard method is going to be better when your office is larger than 300 square feet. And you can choose the method that gives you the biggest annual tax break. But no matter which method you choose to calculate a home office tax deduction, you can't deduct more than your business's net profit. However, you can carry deductions forward into future tax years. So as you can see, claiming tax deductions for your home office can get a little complicated. If you have questions about qualifying business and home office expenses, I recommend consulting a qualified tax accountant to maximize every possible deduction and save money. The cost of working with a trusted tax pro is worth every penny because they will probably save you more than their fee. That's all for now. I'll talk to you soon. Until then, here's to living a richer life. Money Girl is a quick and dirty tips podcast, and we have a terrific team I want to thank. Steve Rickyberg audio engineers the show. Brandon Gaches is our director of podcast. Holly Hutchins is our digital operations specialist. Morgan Christensen is our advertising operations specialist. Davina Tomlin is our marketing and publicity associate. And Nathaniel Hoops is our marketing contractor.